Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's break down today's market price action. It's a Wednesday, September the 4th. Let's get into it. As always, we'll be taking a look at broader market analysis, take a look at what's happening in the sector analysis, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we jump into the market analysis, let's just jump right into the numbers over here. And you can see that it was a bit of a flat day in the market. So daily news, nothing really has changed. Flat day overall. The big tech continues to underperform, and that seems to be the case here. We had a small little bounce here, as you can see in the chart here. Again, this is not the candle that you want to see, where it did bounce, but then it ended up giving up a lot of its gains here. So right now, it's just hanging off the 20 and the 50 moving average. We got the resistance right over here. So at this point, it looks like market wants to break down first before it rallies. Remember, we are in this seasonality month where September could be an ugly month. So we'll see what happens. But right now, this is not the price action you want to see as far as if you're the long here. But at the same time, if you take a look at the broader markets like the RSP, which is the equal weighted index, you can see that this thing is holding it much better. So this is where you're going to get a whole two different pictures here. And I think that there's still value to hold on to. It's not really, the broader market's not really all falling apart. Underneath the hood is still holding it there. But we have the big tech, which is really, bringing the markets down. Here we are, NASDAQ, you can see that this thing is already below the 20 to 50 moving average. So yeah, interesting markets here. Now, if you take a look at the numbers, you can see that Dow Jones flat, S&P slightly down, Q slightly down. So you can see that it was not a big day. Oil is definitely the worst performer so far. It continues to slide down. But outside of that, it was just a bounce that ended up giving up some of the gains. Now, if you take a look at the advanced decline ratio today, again, half and half, 52 versus 44. And here we are above and down 50-day moving average. You can see that this number climbed up a little bit here. Last week, we were about 34%, and here we are about 43. So there's a bit of a slide down there as far as that market breadth goes. But as far as the heat map goes, you can see where the pain is. Microsoft, Nvidia, Apple, Google, Amazon. That's really where all the weakness is. Along with the energy sector, you can see everything in the energy down. So we can take a look at all these stocks that are just underperforming here, along with the oil market. So outside of that, you can see there's quite a few greens in there as well. So this is where diversification is very important, and taking a look at the relatively strong versus relatively weak. Now, as far as the outlook goes, we are down to zero. Well, again, this is where when we are right at that moving average, again, we're not sloping anymore. It's right there. So I think this point, it could really go either way. So that's where you have to be really open on both the best and the worst case scenario if it gives up those levels here. So the outlook, again, we want to be cautiously bullish here. Now, as far as the possible trade goes, I have some trades that are continuing from last week. There's still good developments there, so we'll take a look at those. So let's just jump in. The first one here is the Procter & Gamble. You can see that this thing is just ripping higher. Broke out above that range resistance, and here we are 2 days up. Of course, want to see any sort of pullbacks that would likely to buy into. So far, good price action there. Then we have the United Health. You can see that healthcare is doing well, and this thing it just broke out. So I think this can easily go higher as well. Looking for some bull call spreads on this one. Now, as far as the other one goes, here we are looking at Johnson & Johnson. This thing is also moving very nicely as well. So you can see that there's things actually doing well. And then there are things that are not, stuck in the range. And you can see that this thing is a nice rejection off that resistance range high, which kind of reminds me of what happened back in April. So I like this as a range we want to play here. So we just reject the upper level. I think I like to stay in between this 43 to about 39 area. So that's what we're looking at. Now, let's take a look at the underperformers. So here we are, the first one, coin. You can see that this thing, because it's a classic bear rally setup below the 20, below the 50. It looks like it wants to break down lower here, along with the side that the cryptos are not the best place to be. So this one goes on the top of the list here. We have the Micron. You can see this thing is also right at the support. So a lot of these semiconductors, you'll see that they're kind of right at the support or I want to break lower. So this thing is looking very nice here for the breakdown, below that 86 level down to 80 as a target. Now, taking a look at the last one, we have, I think there's another one is Intel that I had it on the list, which is, again, making a nice low base as well. So going to tomorrow, well, I think the next 2 days are important because markets are looking for that data. We have the employment data, the ADP numbers tomorrow, the actual employment report on Friday. So we'll take a look at that one. But I think until then, market likely to chop over here. So tomorrow we have the ADP numbers, ISM services number as well. But I think the bigger kicker will be on Friday when we get a jobs report. And the big question is, do we get that back-to-back worst job report, or is this job report going to be better than the last one? Right now, based on the bond market, it looks like markets are pricing in for a weaker report, maybe looking for a weaker dollar, and the bond yields are falling. So there's a bit of a trade that's running ahead of that report. Now, outside of that, the energy support, we have Broadcom tomorrow, DocuSign, Neo. There's a few names there. So I think a good time to be a bit cautiously bullish here and just looking for that diversification, looking for equal amount of longs versus shorts, and looking for that relative strength versus weakness. Thanks everyone for joining. Happy trading. See you next one.